Do you realize your monthly mortgage payment will likely be increasing substantially as the Federal Reserve cuts interest rates? I know this sounds completely counterintuitive, and you may even be thinking, no, my mortgage won't be budging even a single penny because I have a fixed rate mortgage. I agree with you. The interest rate on your mortgage will not be changing, but yet the other aspects of your monthly payment will be changing, and that's the problem that I want to bring to your attention because this is going to blindside a lot of people, and I want to share with you exactly what this means going forward. So let's get into it, and I will break down all the details for you. First off, can I ask a huge favor of you? Please make sure to like the video with the big thumbs up button right down below. Thank you so much. Really appreciate that. Also, please make sure to subscribe to the channel as well with the big subscribe button right down below the video. Thank you so much. Really appreciate you. I want to help you out in any way that I possibly can, as I totally get it. Money is tight right now for virtually everybody, and this has not been a very friendly environment over the last few years here with all these high prices. It's tough out there, okay? Anyway, thanks so much for joining. Please like the video, subscribe, and let me share with you what's going on. All right, so Federal Reserve cutting interest rates. This is also going to translate into lower interest rates on mortgages. Nice. Well, hopefully you are one of the many people out there that is locked in significantly below the rates that we're currently seeing right now. In fact, about 80% of the mortgages out there are locked in below 5%. That's really nice, right? So a lot of people definitely don't want to be going out there refinancing or buying something new right now as rates are still above that level, right? But here's the situation. So as the Federal Reserve comes in and starts cutting interest rates, you hear this all over the place. You hear from realtors, you hear from buyers, you hear from sellers, you hear from the local media, you hear from everybody saying, oh, the real estate market finally getting a little reprieve with interest rates coming down. You're going to see buyers flooding the market. To some degree. It depends on where interest rates come in at. But yes, the lower that we see interest rates go, obviously the more and more buyers are going to start stepping into the market. But what is this going to do to the overall real estate market? You know what I'm about to say. It's going to drive prices higher, right? It's simple economics, simple supply and demand. When you have more buyers coming into a market and equal to or whatever the supply is at that time, if supply has not kept up with demand, guess what? Prices must go higher. It is simple economics, okay? So unless we see a massive influx of supply on the market, we're going to see prices driving up. We're going to see bidding wars. We're going to see people, bidding higher on homes. We're going to see these prices going up again. As a result of that, what does this mean? We're going to see more appreciation in the real estate market. Okay, how is this going to impact your mortgage payment, right? You're locked in on a 30-year or 15-year fixed rate mortgage. You're not budging, right? Not totally true, because here's why. We saw this here over the last few years, and we're going to see it again this time. As these interest rates come down, again, we're going to see these prices going up because more and more buyers stepping in, driving prices up in markets. And therefore, what's that going to do? It's going to drive up valuations. What happens when we see valuations go up on real estate? Guess what? You see your local county coming in with their hands stuck out saying, oh, we see that your valuations went up. Guess what? We want a piece of that pie. And they come over with their hands sticking out, looking for their cut, right? So this is going in the form of property taxes. Yes. Well, what is also included in most mortgage payments? Not every single one. Most people have their mortgage payments with their insurance and their property taxes. The PITI, which is usually called principal, interest, taxes, and insurance, is usually escrowed. So in other words, all of that is paid through one monthly payment, and they take care of all of it for you, right? Most mortgages are set up this way, not every single one of them. Some people do pay their insurance and their property taxes individually, but most are escrowed, right? But anyway, as we continue to see valuations driving up because of higher prices and buyers driving these prices higher, bidding up and up and up, and we see like that, then our local counties are going to come in and they're going to say, look, your $300,000 house is now worth $320,000, and we want our fair share of taxes on that $320,000 of new valuation, right? So you're going to raise property taxes. What happens with property taxes when they go up? Well, guess what? Your lender, whoever that is, who's paying your property taxes on your behalf, they're also going to raise your monthly payment because they're saying, look, your property taxes have gone up by $400 this year, whatever it happens. I'm just making up a number for an example purpose, right? They're saying your property taxes went up by $400 because your property's worth more now and your greedy county wants more of your money. So what they do is they float that balance back to you. They say, we need an extra, $82 a month or whatever. I'm just making up numbers here, okay? we need an extra $50 a month or $80 a month to make sure that we have enough in escrow to pay your property taxes. That's how your mortgage goes up. It's not in the form of principal or interest. Nope, those are adjusting each and every month. More is going to principal, less is going to interest as you pay your mortgage down. Your interest rate is not adjusting lower. It's not adjusting higher. It's the property taxes. When you're escrowed and you're paying all of it, the PITI, every single month, this is when you see your property taxes going up and therefore your monthly payment going up as well as a result, okay? That's what's going on here and why you will see higher mortgage payments. Now, we're not done with the conversation yet. Guess what also will be going up as valuations rise? Yeah, you know what I'm going to say. Insurance. Why? Your greedy insurance company wants the same thing. Hey, look, your house was $300,000 when we originally insured this thing a year ago, 2 years ago, whatever. Now it has gone up and we're looking at the current value and it's $320,000. Guess what? Now we need to charge you more because if there's a claim on your property, it's going to cost more to repair it, right? So now your insurance premium went from, I don't know, $1,200 to say $1,500. Again, I'm just making up numbers here for example purposes, but now your premium on insurance also went up, say a couple $100. And now, again, most mortgages being PITI, principal, interest, taxes, and insurance, that is paid by your lender to the insurance provider every single year. So what do they need to do? Collect more money from you every single month to make sure they have enough money in escrow to pay your property taxes to your greedy county who wants more of your money and your greedy insurance provider who wants more money out of you there as well in case you happen to have a claim. See what I'm saying here? So this is how your mortgage payment will go up. If you didn't see your mortgage payment go up over the last few years here, as we saw valuations on real estate really climbing in, say, like, the second half of 2020, 2021, 2022, 2023, we kind of stabilized. It didn't really, interest rates were pretty high at that point. So 2023, we didn't see a whole lot of appreciation. 2024, kind of the same situation, not a ton of appreciation, but as we see these interest rates go down, the more and more interest rates go down, the more and more buyers are going to step into the market, right? So I know I've been seeing this for a very long time now, and I know there's a ton of other people saying the exact same thing, which is this. You keep hearing all this, this noise out there, and they're like, oh, when interest rates come down, we're going to see such a value in homes. No, you're not. That's stupid. I can't believe anybody would say that. Why would they say that? Again, if you understand simple economics here, as interest rates come down and home affordability may be getting a little better, as in, your monthly mortgage payment on, say, a $200,000 house was going from, say, I don't know. I mean, what would that even be? $1,500? Again, I'm just making up numbers. I don't know exactly what it'd be right now. But based on the current rates at like 6.5%, say, let's just say it's $1,500. Now, let's just say the interest rates go down to, say, 5.5% or 5%. Now that $1,500 mortgage is maybe $1,200. Hey, it's more affordable, right? It is more affordable when you look at that aspect. But yet, guess what? Now that $200,000 house has 15 or 20 buyers or interested prospective buyers, whereas, say, a year ago, maybe it had 3. You see what I'm saying here? Because of interest rates. There were only a few people that could afford that. Now there's more people that can afford it because the overall payment on that house comes down. Well, guess what happens now? They bid the price up even higher. They bid the price up by 10%. Now it's a $220,000 house. You see my point here? We're not really making any ground here when it comes to home affordability as interest rates come down. You're just going to see more and more buyers stepping in and people that are basically just, it's all going to be basically parity at the end of the day, okay? No matter how you cut it, whether it's high interest rates and low demand or low interest rates and high demand, we're going to be kind of at the same point. Pick your poison, right? What would you rather have? Pay a lower price and a higher interest rate that you can refinance at some point in the future, or pay a higher price with a lower mortgage, with a lower interest rate that you probably can't refinance to much lower of a rate? I don't know. I guess for me, I would rather pay a little lower price and pay a higher interest rate that I can refinance at some point and lock in a lower payment on a house that I picked up at a lower price. See what I'm saying? That's just me. I like a deal on anything. We could be talking about eggs. We could be talking about chicken. We could be talking about tires. We could be talking about a pile of dirt. I don't care. I want a deal. That's all I'm ever looking for in life. I just want a deal. I want a discount. I'm always trying to negotiate everything I do because why not? What's wrong with asking for a discount? I ask for a discount all the time. I say that all the time as well. All right. So anyway, Make sense? Does all this make sense here? I think you get it. If you're in the game, if you know what, anything about this, if you're looking to buy, looking to sell, watching real estate at all, you know exactly what I'm talking about here. And hopefully this rings a little bit of a bell. If not, just wait for your valuation from your county and just wait to see how much they try to get out of you. Just seriously. I mean, seriously, that's what it comes down to, right? So anyway, hope this helps you. Thanks so much for watching. Really appreciate it. Please subscribe down below if you haven't done so yet. Totally free to do so. Like the video. Again, thumbs up button down below. Thank you so much. Really appreciate it. Otherwise, check out the other videos here on the channel. Thousands in the video library. About 5,000 videos there. I've hand-selected some very popular videos for you down below in the description at the top of the comment section. Check those out. Otherwise, right now showing up on your screen, you'll see some videos there as well. Thanks so much. Really appreciate you. Have a nice day. Wish you the best of luck. And again, I will keep you informed on everything going on right now. I know it's a super weird time. Thank you. Enjoy your day.